Hi, this is Palmer coming to you from ForexSwingTrading.com, where our job is educating traders. Today we're going to talk a little bit about cycle analysis. Now, this is a methodology I actually came up with myself, so you're not going to see this anywhere else, but it's the most reliable way I found to tell which side of the market to be on. It's not always right, but it's the thing that I found that works the most for me. Okay, so the cycle analysis, the way I do it, it's going to tell you about a little bit about the underlying structure of the market. It incorporates the sort of natural ebb and flow of the market. And the system is it's dynamic. It's not static. So like the markets, it's always fluctuating because it uses averages. I've looked at some people's method of cycle analysis, and they try to use the same method. For example, one way I was taught was that markets generally move in three waves up and then three waves down. It just didn't make any sense to me because if that were the case, then markets would generally go nowhere. Okay, which is sometimes the case. In a neutral market, markets will go up and go down, usually proportionally to one another. But in a trending market, it's going to go up a lot higher than it's going to retrace. Okay, so that's something I'll talk about in a minute. Again, knowing which direction the market is likely to make the biggest move is half the battle. Then after that, it's just a matter of timing and getting into the market. And so that's a big part of what cycle analysis does. Like all the other methodologies that I've talked about, I don't use cycle analysis alone. I use it in conjunction with all the other tools that I have. But this is one of the key tools. I think it's one of the most important things to understand to be successful as a trader. Not only can cycle analysis be used for telling you which side of the market to be on, it can be also used for profit targets and for calling reversals. So it really is very handy. It's a very handy tool and something you really need to study if you want to be successful as a trader. Again, it is the most reliable way I've found of calling turning points, and it gets you in much earlier or gets you out much earlier than any other technical indicator that I've found. Okay. So the way I do cycle analysis is I use three tools that tell me what the daily market status is. I use something called trend diamonds. If you don't, comes as a part of the software package from Smart VSA, so it is something that you have to buy. If you don't have Smart VSA, you can substitute the CCI, the Commodity Channel Index, which is a typical indicator available free with MT4. You need the VMA, which is the volume moving average. Okay, so this measures the volume average and identifies trend direction. Okay, I'm going to have that up on sale for my website. And then you also need the ADX, okay, which is also another common indicator available. Now, bear in mind, I use the ADX differently than most people do. I use it the way Charles Lebeau taught, and this is going to be measuring trend strength. So again, you've got a volatility measure, a volume measure for trend direction, and the ADX measures trend strength. Okay. So using these three indicators, it's going to give you 7 states of markets. Okay, so you're either going to have a bullish, bearish, strong trend. Okay, so when all 3 of the indicators are giving you a bullish indicator, this is a bullish, strong trend. If all 3 of them are giving you a bearish indication, then this is a bearish, strong trend. Okay, likewise, you have a bullish, bearish trend. Okay, so if only 2 out of the 3 indicators is giving you a bullish trend or a bullish indicator, then you've got a bullish trend. If 2 of them are giving you a bearish indication, a bearish trend. Okay, and finally, or next, if one of them is giving you a bullish indication, you've got a bullish weak trend. One of them is giving you a bearish indicator, bearish weak trend. And if all of them are giving you neutral indicators, you've got a neutral trend. Okay, so as you can see here, we have a white trend diamond. Okay, that's a neutral setting. We have a gray neutral VMA, so that's also neutral, and we have a declining ADX. Okay, so that makes the market neutral. Okay, so in order for the ADX to be considered bullish or bearish, it's got to be climbing, and it's got to be climbing by at least 1 point. Okay, it doesn't matter. This is just an indicator of trend strength. It's trend strength. It's not going to tell you trend direction. So as long as it's climbing by +1, whether it's in a bullish market or a bearish market, that's just showing you that the trend strength is strong. And so we're going to we're going to add that as an indicator, or we're going to add that as one of the 3 indicators rather than it being neutral. Okay, the VMA is either going to it's either going to be gray for neutral, or it's going to be blue for bullish, red for bearish. Okay, and then the diamonds are either going to be green for bullish, white for neutral, or red for bearish. Okay, if you're using the CCI instead of the trend diamonds, then the CCI is going to be when it's above 100, that's considered bullish. When it's below 100, that's going to be neutral. And when it's below negative 100, that's going to be bearish. Okay, so again, you're trying to look for the 7 states of market and you're going to use a daily chart. Okay, and that's going to tell you how you're going to approach the market. Okay, so then we're going to take the weekly Pip average, and the way you're going to get this, I also have an indicator for this that I've customized, but you can also substitute the weekly 4-period average true range, and this also comes free with MT4 or NinjaTrader. So you're going to put a 4-period ATR on a weekly chart. Okay, so that's going to obviously give you a month's worth of data. Okay, so once you've got this weekly average, you're going to plug it into this spreadsheet and get a Pip count. Okay, now I'm gonna be selling this spreadsheet calculator on my website, so I'm not gonna tell you the exact formula. So once you plug this in, this is gonna tell you the number of pips that you're going to expect the move to happen. Okay, so we have the weekly average is 144. We're in a neutral market. So we're going to look for the Pip count to go between 129.6 and 144 because it's a neutral market. Okay, if it was a weak trending market, we would look for the Pip count to go between 162 and 180. So the 162 is the minimum requirement I'll use for it to turn. Right now we're in a neutral market, so I'm going to use 129, about 130 as a minimum requirement. So if it doesn't hit 130, I'm not going to take the reversal until it gets there. Okay, if it doesn't get there and it reverses, well then I'm not going to get on the trade early. I'm going to wait for my trend indicators to start signaling. Okay, my technical analysis indicators. Okay, it could go as high as 144. Of course, it could even go beyond that, but we're going to expect a range between 129 and 144. Okay, and then we've got weak trending, we've got trending, and we've got strong trending. Okay, so those should be self-explanatory. Okay, in addition to the pip count and the daily market status, I'm also going to be using a 4-hour Williams percent R. Okay, so the Williams percent R generally bounces between the overbought and the oversold levels to complete a cycle. So if I think that if the cycle is just finished, if it's completed the pip count and the 4-hour Williams percent R is oversold, then I'm going to look for it to start moving up. Okay. And as you see here, this is the example I just showed you on the chart. So as you can see, when the Williams percent R was oversold at the bottom, and we had already completed the pip count, the market started moving up. Okay, and it moved up 147 pips. So we were expecting it to move between 129 to 144. So it overshot by 3 pips, but that's pretty good. Once it got oversold and it made the pip count, we were looking to short this market, okay, because it's a neutral market. I use a couple of other technical indicators as well, but this sort of form of cycle analysis I think is one of the best tools I have for calling turning points and knowing which side of the market to be on. Okay. So when you're doing a pip count, there's a few things you've got to ask yourself. What status is the market in? Then you're going to go to the spreadsheet, plug in the weekly average, find out what the pip count should be. Then you're going to use your counting tool on MT4, and you're going to start at the lowest point, the absolute lowest point of the move, and you're going to continue to the highest point that the move's been made, and that's going to give you the pip count, and this is going to tell you whether the pip count has been made or not. Okay. So what constitutes a cycle? Well, generally a cycle is between 2 to 7 days long. You're going to use the weekly average, okay, from the average true range. You're going to plug the weekly average into the spreadsheet formula, and that's going to give you the pip count that the cycle should fulfill. You're going to look at the Williams percent R 4-hour, so it's going to fluctuate between overbought and oversold, okay, or oversold and overbought. Okay, and it can go to accomplish a cycle. It can complete 2 cycles of being overbought or oversold before it fulfills the pip count. Okay, that does happen. You're going to look at the daily status, so you know what the pip count should be. Usually, probably 60-70% of the time, the pip count is within 10 pips, 10 to 15 pips. But if a cycle really overextends or underextends a pip count, this is often a signal that there's a trend change going on. Okay. Obviously, we also have counter trends, and I have a methodology to count those as well. Okay, but you're gonna have to get the spreadsheet to get that information. Okay. One of the other things that I'd use this pip count for is, it tells me if there's enough room left to enter a position or not. So let's say the pip count is 147 and the markets have already moved 117 pips. All right. Well, I'm not going to be entering that trade because I only have 30 pips left to run. So I want at least a 2-to-1 reward to risk ratio, right? So if I'm going to risk 30 pips, I want there to be at least 60 pips left in the move. Generally what I do is I say at least 50% I want at least 50% of the pip count left. So let's say the pip count is 144 like it was, then I want at least 72 pips left on that move before I'm going to enter the trade. Okay, so what are some of the advantages of using cycle analysis? Well, it can give you an idea of which support or resistance level that you're using is most likely to hold beforehand, right? If you're using daily pivots or Fibonacci's or any other number, supply and demand zones, you're never really sure which of these zones is going to hold or not hold. So using cycle analysis, you'll actually know beforehand which one is most likely to hold. Okay. Another tool I like to use is the Fibonacci extension tool. In conjunction with the cycle analysis, and of course, like I've always said, don't use these tools alone. Use it in conjunction with other non-correlated tools like VSA, time analysis, and seasonality. Okay. Cycle analysis predicts turns rather than just reacting like technical indicators do, and they get you cycle analysis combined with some sort of support and resistance can get you into a turn much, much earlier than any other technical indicator that I've found. Again, using cycles, even if a cycle overshoots or undershoots, this is also has important information because this can often signal a trend change. Knowing which way to trade is half the battle. The other half is just timing, and you can use volume spread analysis and technical analysis to time your entries. But really, knowing which way to trade is really, I think, one of the most important things in trading. Okay, and finally, again, it can be used for profit targets as well as reversals. Okay, so that's cycle analysis. If you'd like to know more, please come and visit us at ForexSwingTrading.com. I'm going to make the spreadsheet available along with some other indicators that you can use to do your cycle analysis. So please come visit us. If you have any questions, email them to me, and happy trading. Thanks a lot for listening. Bye-bye.